Hello everyone, welcome to this trade breakdown on EU. In today's breakdown, I'm going to go over the two trades that I took on Tuesday and Wednesday. I'll share my thought process behind those trades and what was my rationale, and then I'll share my current expectation for the rest of the week. I'll also explain whether or not I'm going to be trading for the rest of the week and what my thought process is behind that decision. So, first of all, let's start with the Tuesday's trade and I'll break down everything from start to finish just like I always do. Now, first of all, this was a setup whose outline and whose directional buys I shared live inside TC. I gave you the directional buys, right? I also shared my expectation for buys and I also laid out the exact narrative well in advance inside the group, right? Inside the daily price action update that I uploaded on Tuesday. Now, some of you saw the trade unfold in real time, and that's exactly what I love seeing, right? That's the whole point of this community. My objective is to help you actually see what real trading looks like, right? Day after day from the ground up. And that's exactly what I've been doing since the first month, and you know that. Now, yes, Monday was a loss, right? We took a loss together on Monday, and I took that loss in front of you and also shared the reasoning behind it, and I broke it down for you completely. The reality is that that was a structured loss. We planned it, it was properly managed, and that loss was completely in line with my framework. But then after that, you can see that by consistently sticking to my system and my edge, I came back with two wins. One on Tuesday and then another one on Wednesday. And both of them were executed cleanly, and the outline and the directional bias for both trades were shared live with the community. And you can see just like that, I'm in profits again for the week. And if you followed along and executed according to the updates and according to the outlines, then you are likely in profit too. But if you missed the trades, or you weren't able to act live, or you didn't know how to dissect or digest that information that I was giving you, or you didn't know how to navigate through price action, then that's totally fine too. Because after all, your job and your objective inside TC is to learn. Your objective at this point is to study the breakdowns, understand the logic, and reverse engineer the decisions and the content that I'm giving you and learn from it, because that's exactly where the real growth happens. It doesn't Growth doesn't happen by copying my trades or chasing my trades, right? It happens by understanding why they happened, reverse engineering my content and my trades, and studying the breakdown in the content that I'm giving you. And then you'll see how much you improve in just a short amount of time. Now, enough of that, let's move on and let me break down this trade for you. Now, as you know, heading into Tuesday, my directional bias was bullish. I shared that inside the daily price action update and I explained the reasoning behind it. And I also told you exactly what I was expecting, which is long opportunities or long trades only. Now, in the first half of the day, you can see that price was printing this bearish price action on the lower time frame. But despite that, I didn't look for any trading opportunity or I didn't frame any trade ideas on the lower time frame. And you know why? Because right around here, there was no valid key level for me to trade from. And that's where most traders go wrong. They try to trade every single candle without a full context, right? You need to remember that for framing a trade idea, you need three non-negotiables. First of all, you need a clear directional bias, right? Obviously, which comes from the high time frame drawn liquidity. And on Tuesday, we had that. My directional bias was bullish and my drawn liquidity was higher. The second non-negotiable or the second aspect that you need is a well-built narrative, right? And it's usually developed through the open high low close framework, power of three, and so on, right? And we had that narrative too. I explained that narrative in the price action update. We had these two aspects. We had a clear directional bias, we had a proper narrative, but the only thing that we didn't have is a proper market context, right? Meaning, first of all, a candle range, and more specifically, a key level. right? A key level that we can actually use for execution or to frame a trade idea. Now on Tuesday, we had a clear directional bias, we had a proper narrative, but the only thing that we didn't have as a market context, and our job on Tuesday was to wait for a proper market context to form and for the market to show us exactly what it is doing and how that market context could evolve, and then we would adjust to that market context and trade that, right? That's what our job on Tuesday was. And because we didn't have any proper market context, I didn't took any trades during the first half of the day, right? During London Open, London Close. And the only trade that I took was after New York Open during the London Close session, when the market took out this low, had an SMT divergence with DXY, and it all happened at a key time. And after that, I framed the trade idea towards the higher time frame drawn liquidity and aligned with my directional bias, my initial directional bias, right? So in the morning, we had a Bayesian narrative, but no market context. There was no key level for us. And because of that, I stayed risk off. And then during London close session, what happened is that things started to align. Price took out this low, and this low was now our key level. And in that exact moment, just like I said earlier, we had an SMT divergence with DXY. What happened is that you can see that EU took out this low, whereas DXY failed to take out this corresponding high, which led to this divergence right here, and which gave me the first signal that now maybe a reversal could happen here, right? It created not symmetrical price action, which signaled strength in EU, and that was the first green light. Then along with that, I also marked out this 5 a.m. candle is my candle range. And the reason why I chose this exact candle as my candle range is because it perfectly aligned with this low right here. And along with that, we had that divergence is a key factor. And most importantly, this candle range low was purchased at a key time, which is the London close scale zone. Now with all these three elements in price, first of all, the directional bias on the higher time frame, the narrative and this divergence, and then the timing in the key level, I was ready to look for an entry, right? And then on the 15-minute time frame, I waited for an order block entry to form. And once the order block was confirmed, right? Let me show you. Once this order block was formed right here, I then executed this trade with a predetermined stop loss and take profit level. And it played out perfectly. Now let us go up to the 4-hour time frame and let me summarize everything for you. So to summarize everything that happened on Tuesday, what happened is that during the first half of the day, during morning, during London Open, London Close, and New Year session, we had a proper directional bias and a narrative, but we lacked a market context in the form of a key level in a candle range, right? And obviously, you know that to frame a trade idea, we need a key level. And that only happened after we took out this low, and then after that, I took this low as my key level. We had this SMT divergence. This 5 a.m. candle is my candle range. And only then I framed this trade idea. And because we didn't had any of this during this price action right here, I just stayed risk off. Now, some of you might be wondering, we had this opening gap as a key level, but the thing is that we were already inside it. And yes, it was used to frame an analysis or to frame the directional bias, but it wasn't sufficient enough to be used to frame a trade idea. And to frame a trade idea, I needed a separate key level, and that only showed, and that was only, what is the right word for it? And that was only given once we took out this low. And yeah, that's the summary. Now, some of you took the same trade, and that's wonderful. That's amazing to see, because it means you are learning to think like me structurally and not just emotionally. And for those of you who missed it, again, let me tell you this again, learn from it. The whole thing is documented. right? Study the key levels, study the divergences, study these breakdowns, study the content, and understand why the setup made sense and why I avoided trades throughout the first half of the day. And that's how you build skill, right? And that's your whole point inside TC. If you're just here to copy my trades or chase my trades, then let me tell you, you are doing it wrong and you are in the wrong place. But if you are here to learn from me, learn about the intricacies and the details of real trading and what actually real time trading looks like, then you are in the right place. And I can assure you that inside TC, you'll get top notch and quality content like nothing else, right? I don't think anyone has been as transparent as me and been breaking trades down like this and giving you these outlines and these trade outlooks, these high time frame weekly and market outlooks that I'm giving to you. I don't think anyone else is doing that at the moment, right? I don't know anyone. Maybe I'm wrong. Maybe you could show me someone. Now, enough of that. Let's move on and let me break down the Wednesday trade. Now, let me break down this trade that I took on Wednesday. Again, the high time frame outline and the high time frame directional buys for this particular trade was also shared live inside TC. I showed you exactly what I was expecting and why I was expecting that. Now, going into Wednesday, my directional bias was bullish just like Tuesday, and I shared that I was looking for long setups only. Now, during the Asian session, we had an expansion leg higher, right, which signaled to me that we are likely going to have a delayed protraction profile on the lower time frame during the London open session or during the London close session. But again, as you know, I wasn't just going to jump in randomly. I needed a proper market context. During this point in time, right before we formed all of this, we had a directional bias. Yes, we had a directional bias and we had a narrative, but the only thing that we didn't had is a market context, and I waited for it to form before I could frame a trade idea, right? So the first thing that I noticed was we had this clean fair value gap, this higher time frame 4-hour fair value gap. What I expected for price is to test this fair value gap and then expand higher from here. And you can see that that's exactly what happened. But obviously we needed a candle range as well. And that candle range came from DXY. What you can see right here is that we've got this particular candle on DXY, right? Obviously these two are correlated assets, right? We had this fair value gap on both assets. EU tested it, DXY tested it as well. We had this clean candle range on DXY, which acted as a reference point for me, right? And that became the context for me, and that became the context I needed. And yes, your candle range or your key level doesn't always need to be on the same asset, right? If it's a correlated asset and it adds structure, it counts as well. For example, if price test a key level on NQ, but if it doesn't on ES, then that still counts because those two are correlated assets and you only need one of those assets to either test a key level, purge a candle range, or have an SMT divergence, right? You need to remember that. So once DXY purged the candle range, we tested this fair value gap, and all of this aligned at a key time. I started looking for a long setup, right? I waited for an order block confirmation entry to form, and you can see right here that once this candle got engulfed in the form of price closing above it, I then executed this trade in the form of taking my entry right here. I put my stop loss below the order block's low, and I targeted this high, which gave me a 3-hour trade, right? And that was my whole trade. Now, even though if we look at the higher time frame, you would see that after this trade played out, even though price pulled back later in the later half of the day, that's completely irrelevant to us, right? because what mattered is that I executed the plan, I hit my target, I followed the order flow, and that's all that matters, right? We had a trade, we got in, we got out, and that's actually what matters. We don't care about what happens after that, right? After we executed everything, the next job that we have is to just wait for price and wait for the next day, right? And this is exactly what trading looks like. It's not trying to be right all the time, it's not chasing price, but it's showing up, planning properly, waiting for the right structure, the right market context, and executing your edge with precision and confidence. And that's exactly what we did this week on Monday, Tuesday, and Wednesday. And that's it for the trade breakdowns.